What's going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto. We're going to look at Bitcoin today. It's another kind of wacky day, but not too wacky. Honestly, you know, with as big of a candle as yesterday was, it's still very small. You know, this is all like really small. It's the second biggest candle we've had in this whole range. These are big candles. You know, these are big candles. And we haven't seen that in quite a while. It's actually been since March, so April, May, almost 2.5 months since we've seen a candle like that. And I do think those are coming. I do think they're going to be to the downside. I do think we're in a down trend. We're in a bearish posturing right now. And if we were to pull out a channel here, a fib channel, and just see, you know, yeah, we might be in something just like this actually. And you can see that we've had this top here, this top here, this top here, all lower highs as we're going through. Yes, we are higher compared to this range, but you know, the major highs, this is definitely a lower high. And we've got lower lows coming in. We had a little wig wag here between the heart line and the 25% mark through this channel. It's all split up in quarters. If you don't know, you know, it's just right here. Here's one quadrant. Here's another quadrant, which makes two quadrants, a half, right? The third quadrant, and then the end there. Split up into, you know, right here you can see it: 25%, 0.5%, 75, 100. And you know, this is a kind of more narrow channel. I wouldn't expect it to hold for too much longer. We could just go down in this channel, but I think we are going to break out of it. And when we break out of it, that's when we're going to see our big moves. It could be starting now. It could be starting in a few days or weeks. I don't know. We'll keep you updated. But contrary to that, if Bitcoin were to pump off the screen line and break out to the upside, we might see a bigger move up to the upside. Something like this from before. If we were going up, let's just look at that. Personally, I don't think that we're going up, but let's just, you know, let's look at what it would look like if we were going up. If we were going up, I mean, we rejected the 0.5, like on the dot. That's actually really not a good look. I don't know, man. Wow. Actually, I always say beware the 0.5 rejection. It's not something common. It is not something that commonly happens, but when you do reject it, you see significant moves off it. And this would be actually a really perfect setup to go lower. If it can hold this 382 as support, or even maybe the 236 as support, that would be encouraging. I did say yesterday that if we could hold, let's see, I'm going to take away the fib now. That's something to beware for sure. It depends on how today closes, I would say, and I'll make another video later. But if we look here, you know, we're holding this previous areas of resistance. We're holding it as support at the moment. There's not a lot of volume to come in. This really isn't a significant bounce, nothing to get too excited about, but it does look good as it stands. If we were to come from a low here to a high, I would like to see us go a little bit lower. When I say hold this blue line, that doesn't mean that we can't go lower and then just close up above it. I would think that we are going to come a little bit lower at least before turning up, if we were to turn up. But I'm under the impression that we are going to go down, that this is going to be a bearish formation. This was just a bull trap. But you know, to be fair to the bulls, it is doing what it needs to do at the moment. It's not looking bad. Let's see. Yeah, bouncing right off the 886. You know, you rejected the 1272. That's to be expected. This could be a perfect setup to go up to the 1618 at almost 29,000. It could be, and then higher potentially. But I'm really not under that impression. I don't think that's what's going to happen. I'm just, you know, trying to give both sides of the coin here. If you're a bull, you know, you want to hold that blue line. You can wick below it. That's fine. I would say if you go anywhere lower than 27.2, then it's on to the downside. But you can wick below this blue line as long as you don't close the day below it. Or really, I guess you wouldn't want to close the day below this line here. That would be good for the bulls' sake. Yeah. If you're a bear, I guess contrary to that, you would want to close below that blue line. You would want to close below that blue line. But I do think, you know, no volume here. This happened on a Sunday over the weekend when most professionals are not trading. I think that this was a fake move, and it's going to be eradicated as a fake move. just like this one was. This was a 3.3% pump, and then we had 5.1% rejection down. I mean, it continued in the following days. 4.2% pump. It's about a whole percent higher. I wouldn't be surprised if we got something like this, or maybe 3 days of like smaller candles to eat up this whole bullish price action. Maybe we're not ready yet to make a big move down, but generally when you see stuff like this, when you see little pops to the upside and they're proven fake, if this is indeed a bull trap, that's generally the last move you get before the downtrend. And I can show you what I'm talking about. Even here, you get this last pop down to the downside, and that's how you knew it was time to go to the upside. You held a significant area of support as support, and more to the upside. Where here you're moving sideways, you have your last little pop, and then it's time to go down. Then we're in like a miniature downtrend at the least. It might be over soon, but I think it is just getting started. Like this isn't, I guess, too good of an example. You go up before you go down. That's basically all I'm saying. You go up before you go down. We're moving sideways, and then we get some big candles. It's boring. Price is really boring. Think about the psychology of people that are involved right now. In this time frame back in October, it's been boring, man. The last thing that you had that was exciting was a dump, and that happened after a pump. So really, that just leaves you like wondering like what the hell's going on in the market. And you've basically been sideways since, to be fair, August all the way up until October. So August, September, October, 2 months of just lateral movement, or horizontal movement, not up this way. And is that lateral? I don't know. It's not vertical, but after 2 months of boring price action up and down and all these little fake excitements, you finally get some solid candles to the upside, and everyone thinks, oh, these are big. This is like significant moves. You know what I mean? But they forget what an actual big move is because they haven't seen it in 2 months. So then you get excited, you get that last little pump up, and then dumpster. Then the real move comes in. And that's basically what I'm thinking is happening now. We've been in this sideways range, up and down a little bit, some semi-significant moves for sure. I think since April, we've been showing our true colors, the true heading that this wants to go to. That's why there's no demand up here. There's no volume at all. And people are just offloading while they can, and you're seeing that in the price. Every time we go up, people are offloading. And I think we just had our last little pump. It's been a boring, couple weeks here. It's been a boring month of May, and then boom, we get this little pump. Everyone thinks, oh, it's a big deal. It's that 4.28% pump, and really that's not a big deal. And it's going to show you what move is the big deal. I would expect that to be to the downside, but I could be wrong. I was wrong about this little move up. If it comes down, and I should keep like a chalkboard behind me, get all my like I'm curious, I really am curious. I like to think that I'm more right than I'm wrong, but like by how much? Is it like 51 to 49 out of 100? I don't know. Maybe I'm more wrong than I am right. I don't know. If we do come down and bearishly engulf this candle, that'd be really good for my ego. No, but that would be good for the case that I'm making, that the bears are in control and that we are going to go lower. But right now, to be fair, the bulls are doing everything they need to keep this looking bullish and in a good posturing. The way this RSI looks on the 1 hour, I would say that it looks like it wants to come down into the oversold territories, which would imply lower prices. We could come down into this previous price area here. Something like that. We are pretty far above this purple line. It wouldn't be bad to at the least come down and test this as support, confirm this as support. But you would want to get a nice pop. If you're bullish, you would like to get a nice pop off of areas somewhere between like 27.2 to 27,000. If you were to go down that low, you would like to see a nice pop. You don't want down and then lingering price action, because that just means we're systematically working our way lower probably. On a 4 hour time frame, the RSI was hot. We're cooling off now. No bearish divergence to speak of, but you don't need bearish divergence to make a downside move. Volume would help for sure, but we've almost eaten up this biggest candle here already. Had a very bearish top to this, and truthfully, it is just a lower high. I'm not too excited about this. I'm not too worried about this. I would like to see it come lower because I am bearish, but there's nothing really on the 4 hour that's telling me anything other than we have a lower low here and a higher low in price. At the moment, price is higher than this low where this low came from, so that is a bullish thing actually. That's called hidden bullish divergence, and So that it's got that going for it. I generally, when you see true bullish divergence or true bearish divergence, you get stronger moves. When you get hidden divergences, in my opinion, they're always weaker moves. But they are significant, something to pay attention to. This could say that maybe we go back up here, maybe we go above 28,000 again, get one last little rally and create a double top, create some bearish divergence, and then the real move down starts. Maybe something like that's going on. But right now, there's still 2 hours left in this candle. We'll see what happens. A lot could happen. If this candle closes red and we do end up going lower than this previous area, then this could look really bad for the bulls, really good for the bears. And, basically, if we get below this 50, I would expect to see oversold zones, which would bring us probably back down below 27,000, or definitely would bring us below. But right now, bulls are putting up a fight, and they're bouncing at an area that I think is significant if you want to see continuation upwards. What would continuation upwards look like? At least, if this was to be the low, at least 28 to 29,000, probably around 29,000, and it could go higher. And then maybe it turns around from there. But I would be surprised if it went up. I said I would be surprised if we went up from here, and it did. So I can find myself surprised again. But I am expecting this to ultimately roll over. Even if it does have one more leg up, I'm ultimately expecting this to roll over. And if I had a bias right now, I wouldn't think that I would think that that's the current top. But if it does go up a little higher, as long as we're holding this main like downish trend, I wouldn't be too worried about it, And sometimes you do get a little break in lines like these, You get a little break to the upside, and then it comes back down. It's a little fake out. Sometimes you get that, and with a bull trap especially, that I feel like that's pretty common. But I don't know. I think the trap is already set. I do think we're going lower, and I feel like I just keep saying the same thing over and over again. So maybe I'll call it there. I'm trying to think if there's anything else we can look. Oh yeah, there is. So there's something I noticed, or I thought about after I made my video last night. And, obviously bulls are doing good. Actually, I didn't even notice this. It kind of bounced off the lower parts of this ribbon. That's nice, honestly. If you close the day with a solid pop off of that, this could look good. But we'll see. If the price gets below this yellow line again, that's it. It's over. But really, it's kind of in that area where I'd like price to go to, just to confirm that this candle was fake and that this move was fake and it was just a trap. I would like to see prices get down there. But right now, things are looking good. What I'm trying to get at, though, is the last time we had a bearish cross, stay on track here, was back here. And I've showed this a lot in my previous videos. Was right here, little bearish cross. And for a brief moment of a day, we were actually above this cross. We were above it, a little bit. And we came back below it. This pop happened, and we had price action above the cross. At this moment, while price was above here, these lines were probably posturing up like how they are right now. And I just wanted to say that we did see this kind of similar thing happen in the beginning of the cross. And then once we got below the yellow line, we came down lower, and then we closed this one green, tested it again, and just confirmed that we're in this downtrend. I'm looking for something like this to happen. I'm looking for price to come back below the ribbon, confirm that it's resistance, don't confirm it as support, and then give or take, let's see, from here the real dump started 14 days later. So I'm expecting that. That matches what I've been saying. Starting this week, starting Monday. I've been expecting in the next 2 weeks a 20% drop from the top to take place, and the top just got moved up a little bit higher, so maybe we do a greater than 20% drop, but at least a 20% drop in the next 2 weeks, starting this week. And that would look like, let's see, a 20% drop would put us down around 23,000, just a little bit below 23,000. There's not a whole lot going on there, so I wouldn't be surprised really if it was more like a 23% drop, 22% drop, something like that. It could be bigger. It could be bigger, could be less, but I would personally, I guess I'm expecting now like a 22% drop. Especially if we can get this price back below this yellow line. If we have something like what we did last time where we had that little pop up, it literally might be a matter of a couple weeks before that happens. I just measured percentages. I want to measure. Dang it, I keep doing that. You know, a couple weeks from now would be June 12th. Yeah, June 12th. So something in the second week of June, something like that. I might be off. Maybe it happens a little bit later. Maybe it's like 3 weeks out, but or 2.5 weeks out, but somewhere around there. And I think especially if we get below this yellow line, that would be condemning, convincing, vindicating that the bears are in control. But right now, the ball is in the Bulls' court. We've got this bullish posturing coming upon us. If we can stay above this price, then if the yellow line gets above the ribbon here, if we get above the ribbon, or really, I mean, if we just take off from here, if we get technically, I would say above this line here, above 29.8, then I would, you know, even if this line doesn't flip, but it would definitely cross by that time. So whatever comes first, I guess. Price up to here around 29.5, 29.8, or this cross, I'll flip bullish. I'm not saying that I would get in, but I would, you know, I might throw away my temporary bearishness out the window. It wouldn't make sense to me though, because here's this last thing, and I've been talking about this on my videos, and this will be the last thing. We've got this count here on our Elliott wave. If you know about Elliott wave theory, E-wave theory, there's a way to identify moves in the market, and I might have identified a zigzag, and that's actually a pattern. That's a technical pattern. A zigzag is confirmed or compiled of a an impulse wave, a five-legged pattern down or up, you know, whichever way it's going. This is a down zigzag, so the first pattern is going to be down. And this is our wave A. The yellow is our wave A. And then we have a corrective wave. That's 1, 2, 3. You call it your ABC. That's a corrective wave. Impulse waves are always done in numbers. Corrective waves are normally done in letters. You can think of it as more significant waves are done with numbers, less significant waves are done with letters, and that's because a correction is less significant than the overall move. You know, we're in a bear market right now for Bitcoin, but overall Bitcoin's in an uptrend. Like historically, it's got higher highs and lower lows as far as the eye can see, all the way back to its beginning dates. So this bear market, as big as it's been going on for over a year and a half, 2 years? I don't know. I guess a year and a half. It's still just a small correction. It's just, you know, it's an ABC in the long terms of things. Anyways, the next thing that we would expect would be something like another 1, 2, 3, 4, 5 down, something like that. And maybe it happens just like this. Maybe it doesn't. I didn't draw this with any specific price intended, though I do kind of like it. But that's not what I'm expecting. Overall, we are in something like, here, I'm going to put this back on there actually. Something like this, which would be a giant corrective pattern known as a zigzag, and a zigzag is an ABC pattern compiled of one impulse wave down, a corrective wave up, and then another impulse wave down. Impulse waves are generally compiled of 5 legs, corrective waves 3, and then a 5. We got a 5, 3, 5 here. And I do think that that's going to happen. I made a whole long video about it, and to go up from here, to continue going up from here, would just disagree with this whole thing that's literally been perfect. It's 2/3 of the way completed. You can go back and watch my my hour-long video that I got on it. It's not all about that. It's about some other things too, other theories. But what I'm in the title of that video, if I don't put a link, I'll try to remember to put a link in there. But it's Bitcoin price analysis. Beware the bear. I think it's beware the bear, or maybe it's beware the zigzag. But it's got a bear, it's got a little golden goose on it, and then Bitcoin getting attacked by the bear. That's the thumbnail for it. Anyways, I do think we're still in that pattern. If we, oh man, yeah, there's, you know, I don't really like this fib. There's really not. I kind of, if I remember correctly, I actually like this fib a little bit more. Yeah, if we look at this fib, we bounced off the 618 a lot, like tremendously. I'm not saying I like this one more because it's more bearish or bullish. This one to me just doesn't look like it's being respected at all. We go to this. This was the most recent high that sent us down here, like truthfully. And you know, we got respect on the 236, we got respect on the 618, like to a T, a little bit of resistance on the 382. I think this fib matches more. The fact that we're holding the 0.5 on this fib is kind of nice. That does imply that if we come back up, I mean, I full-heartedly would expect that if we came back up to this price, we would go higher, at least to 34,000, if not more likely 38,000. We could go higher. It's completely possible. But that would mess up the 3 count that I have, which in my opinion is just perfect. I do think that it looks to me like a 1, 2, 3. Like, it just looks perfect. Anything more than that, we'd have a 1, 2, 3, 4, 5. That would mess up the current ideal pattern that I'm looking for. And if that happens, you know, we change our game plan, whatever. But to really certify that happens, I think it would need to go above the 886. It can go, like, the price can go as high as 30,000, and this pattern still be in effect. The price can go as high, because I'm pretty sure. Let's look at it, man. ElliottWaveForecast.com if you want to look it up yourself. This is the website that I use. You know, you can use other websites. I've used plenty of websites to like learn about this stuff, and plenty of people who, you know, read books on it. I don't read books on it. Maybe I should buy a book on it, but you know, I've listened to people who are educated in the matter, doing podcasts and YouTube channels about it, and you know, I've tried to educate myself as much as I can on this kind of stuff. And anyways, without any further ado, Elliott wave theory. If we look at it. I don't know why it's taking so long. I've got some slow connection over here. I'm on like the other side of the house from my Wi-Fi. The zigzag, yeah. No, that's not what it was. I wanted to look at, let's see, we're looking at, because that's what it is, impulse waves. So the first, if wave 2 can be at, it says 85.4%, but that's an 886 in my opinion. Like, it's close enough. I don't know where he's getting these percentages off of, but to me, if price doesn't go, and this is what I mean, like I've been on this website before. I do take their information seriously. I do use it as a point of reference, clearly. But from what I know about Elliott wave theory, this isn't a requirement. If it goes to the 886, it's close enough for here. And you do like to see like precise price action with this stuff. But if it's within like a couple of a percent's variation on something that isn't set in stone, like I don't know where they're getting these fibs from, 764 and the 854. I don't know. That's not how I go. That's not what I use. To my knowledge, the 786 and the 886 are deeper retracements. Did I just glitch out? Did I just cut out? I don't know if I glitched out or cut out or anything recently. My phone just did something weird, but hopefully that didn't mess anything up. Long story short, what I'm trying to say is, we could go as high as 30,000, and this last leg down, this last C wave down, could still be in full effect. And it would surprise me if we went that high. It would not surprise me if we started our descent soon. But really, what I'm looking for to kind of confirm that the real bearish moves to the downside are happening, I'm looking for this RSI, this weekly RSI, to go below the 50. Once that happens, to me, it'll be undeniable that from the top to the bottom, we will have a move that is at least something like this, putting us down below $15,000 in the coming weeks. I think that's going to actually happen in the next month and a half to 2 months. I've been saying that the last few videos. If I was to be proved wrong on this, I guess we would have to go, we would have to go above this high in total. And to be fair, looking at the daily, I would start to think that we're going to go above this high if we took out this high, if we took out 30,000, 29.8, 29.9. If we went to 30,000, I would start to be, and I know that's not like really good enough because the top is 31,000. That's only $1,000 away, but that's how we look at this situation, And right now, this little bullish move of 4.5%, it's not enough to convince me that we're done going down. We're still having a lower high here. This happened on the weekend. There's no volume that came in. And, we're rejecting the bullish control zone, an area that we've rejected twice before that sent us down lower. So I'm really not too worried about the bearish position at this current point in time. I feel like I'm just rambling, so I'm going to end it there. If you like the video, leave a like, subscribe. I put more videos out every single day, and yeah. Anyways, appreciate you guys. Take care. Have a good day. Bye bye now.